Welcome to Daily Conversation. This is Mr. K.
This is Eric.
Yeah, today is the 2nd of July 2021 and the time now is 6:17 a.m. Well, today our topic is what do you think about investing in real estate? So before we get started, please click the like button and subscribe to our YouTube channel. Alright, so here we go. Yeah, so investing in real estate, yeah, we can talk about maybe it's houses that used to live, and then can talk about other buildings like some shops or uh, maybe even a land. And today I focus on the houses for living. Yep, and then yeah, firstly, how about I talk about some pros and cons, which I think investing uh in 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 house.
Mm.
Yeah, firstly, I think the pros here is investing in houses, particularly the house that we use it by our own. And yeah, it is an investment which you can something like invest your money, and then at the same time you use this asset, you use it. Yep, and then um yeah, so this is I think the first advantage. If you are going to um use it by your own, you live in the house, and then you kind of pay the mortgage every month. Yep, and then uh for here, compared to renting a house, the cost of rent is just an expenses. And then second, yeah, second here is about stability. Yeah, if you buy a house, and then you don't have to worry um, whether your rent will increase, and maybe the landlord plans to charge you higher next year, or what. And for this, of course, we have the floating of interest rate also if we buy a house. Yeah, but I think we can choose to have a fixed interest rate, right? If you scared about the fluctuation of the interest rate.
Not sure.
Yeah, and then yeah, I searched the internet, and then that is not for Malaysia. Yeah, but it shows that we can have fixed mortgage interest rate, but basically it will charge higher than the floating.
Mm.
Yep, and then the the next one is the scarcity. Yeah, because um uh for houses, it is something scarce, and in many of the countries, our population is still increasing over the years. So this will make the price of the house increase. And if you have bought it, I think the increase of the house price is a good thing. Yeah, so this is the pros here, I think. And yeah, then I would like to go to the cons.
Yeah. Before you continue,
Yeah.
I would like to ask you: is this topic is about investing in real estate, or
Mm.
actually you want to talk about compare between owning a house rather than renting a house because it's a different one. It's different, right?
Yeah, yeah, yeah. I think if you want to talk about wider perspective, like comparing real estate and investing in other places like stocks market, yeah, it is also suitable, I think, and it is also the things that is which is worth discussing for this topic.
No, in my opinion,
Mm,
in my very humble opinion, if you compare about renting and owning a house, this is not
yeah.
investment because a house is for self-use.
Yeah.
This is not for investment.
Oh, so you mean if we buy a house and then we use it by our own, that couldn't be counted as investment?
Yeah, normally, you will treat it like this
Oh,
because let's say you have a spare of money,
mm-mm.
you decided to invest in real estate,
Yeah.
or or whether you should invest in stock market or whether in bond market, whatever.
Mm,
And then you won't consider whether the house can live or not. Yeah,
mm,
because if you invest in real estate
yeah.
and you want to rent out your property, and then you can get the rental.
Mm, yep.
Mm.
Yeah. Yep. So yeah, okay. I think the cons here could also be related if we say we rent it out.
And also,
Mm,
I believe we have one of the topic which is quite similar to this, and the topic is it's something like, I forget the whole topic. It's something
mm,
like whether to own or whether to rent, or whether to buy or whether to rent. And in that conversation, you also discuss about uh this this property, right? If I'm not wrong.
yeah.
Yeah, and
Now I
if you
remember.
mm, yeah, and if you look at these two topics, first is whether to buy or whether to rent.
Mm,
And then the second topic is should you invest in real estate, or maybe is real estate is a good investment.
mm,
Is this two different topic? Obvious, these two is different topic, right?
mm,
But how
yeah.
come you give the same point to a different topic? Doesn't
Mm,
make sense.
yep. Yep. Yeah. Yeah. Frankly, I forgot that we have that topic.
Mm.
Yep. So right. So for this one, I think so. We should talk about investing in real estate and then comparing to other types of investment, right?
Mm.
Okay. So yeah, investing in real estate. Yeah, basically, like you said, uh, we treat um, we 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 buy houses or the shops and then rent it out to get rentals, to get the rents. And yeah, for this one, actually, it is not that uh easy. Firstly, to find the uh to find the person to rent, to find that is called uh yeah, I suddenly forgot the terms. um yep, I mean, to rent it out is not so easy. And second is that it is not as easy as investing in other things, because you need to spend time. Uh, Also, you need to spend additional cost to the maintenance. Yep. So I think investing in real estate is it's not easy. You need to firstly you need to um, have a very stable uh, income, or because you have to pay the mortgage every month, and with a fixed amount. Yeah, second is that you need to spend your time dealing with maintenance or finding person to rent. So I think for these two parts, it is a cons for investing in real estate.
But
Yep.
this is an optional right.
Optional. What do you mean?
You invest in real estate. You can
Yeah.
choose not to rent out. You buy it and wait for the appreciation.
Buy and wait. Yeah. Yeah. Let's say if you buy a shops, and then yeah, you must rent out to cover some of your costs, right?
Yeah.
And
So
also for
so
house.
yeah. So I mean, that is optional. You can
Yeah.
choose to do that. You can choose not to do that.
Yeah. Yeah. Optional, but obviously, yeah, I think people they invest in real estate. They wish to rent out to cover uh, some cost. Yep, and then also because of this, it is
Yeah. No, I know. But why it is a cons?
um
For example, if you buy a stock,
yeah.
if you are allowed to rent out your stock to get an interest, will you consider you need to spend time to study who you want to who you want to like lend out or rent out, and then because you need to study a credit route of other people, you need to study the company, the custodian company, whether they can really well distribute your stock and well manage the stock. So it won't like let the borrower take out your stock and then do some risky investment, and then it declare bankruptcy, and then you cannot get back your stock, something like that. If you have an option, to lend out your stock, is this a cons to you? It's similar like if you buy a real estate,
Yeah.
you have an option to rent out your property to get a cash flow. Is it a cons?
um yeah, it is not. Yeah, it is not, because by renting out, you can get money from that. Yep. Yeah, but I think it's the time and the cost that comes along with this benefit.
Yeah, so how come it could be the cons?
Yep. Yep. Yeah, I think for this one, it couldn't be the con, because it
And
used to be the
also
con if we talk about renting and buying. But if we talk about investing in this real estate, it wouldn't be a con.
and also let's say, please imagine
Mm.
if we okay, let's say I ask you a question. Yeah,
Yeah.
what do you think about investing in real estate or investing in stock market? And then you
Mm.
compare these two,
Yeah.
and then I give you 1 million. You have 1 million to make decisions. Will you buy a house? Will you buy a property? Or will you buy
Both.
will you buy both a mixed portfolio, or will you buy like in stock market? Yeah, so you can compare like this.
Yeah.
And you can say, yeah, I can use 1 million to buy in real estate. And then I don't want to do leverage. And then so, and based on the historical data, annual returns is about 3%. So annual return is about 3%.
Yeah.
For the price appreciations. So the returns is very, very low if I didn't rent out the property and then get extra cash flow.
Yeah.
Yeah. So if let's say you are experience major price appreciations environments, like few years ago in Malaysia, we also have some experience. In China, definitely.
Yeah.
And then just within 10 years, the price can like triple or maybe tenfold. So if you didn't rent out your house, if you didn't like generate the cash flow from your property, does this matter? Is this a problem? No, it's not a problem because the return is very, very high. And look at the same period, you look at the stock market in China, it didn't go up a lot. It didn't go up a lot compared to the property market. Yeah, the index didn't tenfold.
Yeah.
Yeah. And then in this environment, if you can further choose to rent out your property, you have that option. You can generate additional cash flow. This is a features. This is actually the pro of investing in real estate, and it's not the cons.
Yeah, agree.
And also, please imagine if you're investing in stock, you have no income. Especially the company didn't pay you dividends. If the company pay you dividend, you have dividend income.
Yeah.
And if you're investing in real estate, and then you can have extra income, and then you can use that income to borrow more money. You can leverage by using one house and then buy a new house, and then use the new house you buy and then rent out, and then you increase your income, and you can leverage again and then borrow more money from bank, and then you can do more investments. You can scale. But stock, you can't do that. So we talk about the cash flow generating from the rental fee. It actually is a pros. It's actually not a cons.
Yeah.
Right?
Yeah, it's a pro. Yep. Yep. Yeah, and then yeah, maybe the next one I think is the cons, which is because investing in real estate, it is considered non-liquid assets. And for this one, if you buy it and then you want to sell in the middle, or even you have paid up all the mortgage, and then yeah, you need time to convert it into money that you could use. Yeah, but of course, if you have paid up the mortgage, you can like you said, leverage. You can use it as an asset to borrow more money out. Yeah. So, but yeah, basically, if we paid out the mortgage, it will be consider a long term. Maybe it's more than 10 and 20 years. Yeah, so within these so many years, it is something non-liquid. So I think this is a cons comparing to investment, let's say in stocks.
Yeah. Yeah, this is a cons. But actually, the housing is not that illiquid as many people think, because you can do the refinancing.
Okay.
Yeah. So for example, if you hold a gold and you can go and you take the gold,
Yeah.
go to any country, and you bring your gold, go to the country, go to the bank, and then you say, I want to sell this gold to the bank.
Yeah.
Can you do that? You can do that. You go to every country, if there's a bank, you can do that, and you can get the local currency, get the local fiat currency. Yeah, and then if you have the house, you cannot go to other country to do that. You can only do in your own country, and especially normally you cannot do in other states. You can only do in your cities, and also maybe do in your state. If this is a closed state, you can't do that. For example, you can't finance money in Penang if you want to like use one of the house in JB as a mortgage. Really hard. You can't do that, and the bank won't accept. But if let's say you are in JB and you want to get the money,
Yeah.
you choose not to sell your house. You choose to refinance because you still want to hold your house, because you think it will appreciate, the price will still increase. So you borrow out, you refinance the money from bank, you borrow out the money from bank, and then you use the money to do whatever thing you want to do, maybe support your living. And then after 1 year, if the house appreciate again, and then you can do this again.
Yeah.
Yeah, borrow out again, and then borrow out again. Yeah.
Yeah, for this case, it is when the mortgage is fully paid out, or not.
No, if the housing price keep increasing, you can you can refinance additional amount, right? It depends
Oh,
on the value of the house.
so it means that we increase the debts, and then at the same time we can get
Yes.
more money.
Yeah. Yeah.
Oh.
Mm.
Hmm.
Yeah, because if you're thinking from accounting perspective,
Yeah.
you sell your house, which means let's say your house worth 1 million.
Yeah.
You sell your house and then you get back 1 million cash, and then you lose 1 million's worth house, right?
Yeah.
So actually to you, this is the net change is zero. If we exclude all the legal fee, processing fee, all that, the net change is zero. Yeah.
Yeah.
And if we use this borrowing, we use the refinancing, the house still is your house. 1 million wood house is still owned by you. And then you borrow more money, and then you own bank maybe 20K.
Yeah.
Yeah, maybe you own bank 20K. So you have 20K liability, and then you have 20K cash. So also to your balance sheet, it didn't change. There's the net changes is also zero. You didn't increase your income, you didn't take additional debt. To you is zero. Yeah. So you can think like this is also a way for you to get money when you need to when you need money. But for the stock, you probably won't have this kind of choice. Yeah, you can only sell your stock, and when you sell the stock, you can't wait you can't, because you lose your holding, and then if the price keep increasing, and then you lose the opportunity. Yeah. So it actually depends on you. How do you treat this? Yeah. And there's some pros here, also there's some cons here.
Mm.
Mm.
Yeah, for refinance, I think the money that we can borrow is subject to the amount of appreciation, right?
Mm. Mm. And also depend on how much you have paid. For example, if you
Mm.
have paid a lot of money to the bank and then you can refinance the amount that you have paid. And also it depends on the bank. Yeah, it, de-
Mm.
it depends on maybe the bank thinks you are not able to pay back the money. So they don't want to lend you so much money.
Mm. Yeah. Yeah.
Mm.
Yeah. So yeah, yeah, Frankie, also I didn't look wide enough. I just look into Malaysia, and like you said, really in other countries like China, yeah, the housing price increased so much to an extent that the rent that they collect may not be the a big proportion, is a very small proportion to the whole investment rate.
Mm.
Yeah.
And in China, if I'm not wrong, especially for those first tier, second tier, for the housing, sorry, I mean for the residential property, the the yield, which means the rental incomes, only only consider roughly 1% of your house value. So it's the annual rental income is just 1%. Rent,
Wow.
rent, or we say the rental yield. Yeah. And if you compare to the
Mm.
stock, some stock offer you maybe 4% dividend yield,
Yeah.
maybe 5%, maybe 6%, or maybe if you save the money into the bank, yeah, you can get maybe 2%, 3%. So
Mm.
the rental yield is actually quite low, really, really low. Mm,
Mm.
yeah. But would you sell your house and invest fully in the stock market? Maybe you won't, right?
Mm.
Because you still expect the house price can increase a lot.
Yeah.
And also maybe if you want to switch your house to to the stock, okay, and then if you want to do that, and maybe you need to pay tax. Mm. And this is not something you want to do. So you rather hold the house. Mm.
Mm.
Because let's say if you pay tax, you pay, let's say 15%, 15%, 15.
Yeah.
And then and then how much returns you need to earn in order to earn back that 15%? Is it 15? No, it's more than 15. Do you know what I'm talking?
Um. Yeah, I think I'm confused here.
Okay, let's say if your investments funds, if your investment portfolio
Mm.
had lost 50% of its value, how much how much returns you need to earn in order to get back the previous level?
Lost 50%.
Mm.
To get back the previous losses. Um. Yeah, if we don't calculate the opportunity cost, then it's also 50, right?
No, it's 100%. Okay, if
Mm.
if you have 1,000 and then your 1,000 become 500. You want
Yeah.
to use the 500 to earn back another 500,
Oh.
which is
Uh-huh.
previous portfolio amount, which is 1,000. You need to use 500 to earn additional 500 to become 1,000. How much percent you need to earn? How much return you need to get?
Yeah.
Is 100%.
Mm.
Yeah. So if you
Okay.
pay the tax, let's say 15, right? And you use 100 minus 15, so is you now let's say your house is, let's say, 100 million, and then you
Yeah.
pay 15% tax. Now you just left 85 million, and then you want to use 85 million to earn back to 100 million, and then so that means you need to use 15 divided by 85, so it's 17.65%.
Mm.
You need to earn 17.65% in order to get back your money. So there's additional 3%. There's additional 2%.
Yeah.
Mm.
Yeah.
And then you also didn't consider if you sell your house, you need to pay 15%. And then can you get 17.65% returns annual, or maybe in long terms? Can you recover your loss? Can you recover the tax you paid? Yeah, so this is also something you need to consider when you want to switch switch from one investment to another investment. Yeah,
Mm.
especially for house. But also for house, there's also some cons here, because you need to pay the property tax. Sometimes the property tax, I'm not sure. For some area is 1%, for some area can be 2%, or maybe up to 3%. I'm not sure. In some country, in some state, it could be higher. And also in some state, in some area, because maybe it's a developing country, and then they want to encourage the investors, so they
Yeah.
offer zero property tax rate. It also could be possible.
Mm.
But if you invest in stock market, you don't need to pay the property tax, which is like 1% or 2% annual.
Yeah.
So you can think like this is something like the management fee. It is similar to if you invest in mutual funds, you need to pay the annual, let's say like 1% or 2% annual fee. Yeah. And if you invest in housing, you also need to do that. 1%, 2% pay to the government. This is the fee.
Mm. Yeah.
So it could be also one of the cons. Yeah. And also, if let's say
Mm.
your estate rate of returns annually is like, let's say 6%, and you need to pay 2% property tax. So end up you just earns like 4%.
Mm.
6 minus 2 is 4%. And then at the same time, you can get a high return in stock market. Maybe the dividend yield is 3%, and then maybe the price appreciation is another 3%, so add up is 6%, and you can only get 4% in real estate. So in this case, stock
Yeah.
market is better than real estate.
Mm.
Yeah, and you invest in the basic index, the index, let's say like the SP 500,
Yeah.
and then the annual rate of returns, the annual compound interest rate is around, if I'm not wrong, is around 7 to 8%, right?
Mm.
Because last time we have some calculations in
Yeah.
the gold investment topic. Yeah, if somebody want to see, they can go to the comments. Mm. And then this is 7 to 8%. And then how many country, how many states, in how many states the housing can increase 4 to 5% per annum nowadays? We're talking nowadays.
Yeah.
Because the house is the price of the house is already quite high. And also additional pros is you can leverage to buy a house, but you hardly leverage to buy a stock. Of course, you can borrow money from bank and you buy the stock, but the bank definitely will ask you, what's your plan of using this money? Why you want to borrow this money? And if you say I want to invest in stock market, and then they won't borrow you that much, or maybe they won't borrow you. They won't lend you the money. But if you say I want to buy a house, they say okay, I will lend you the money, and because a house as a mortgage, so at least it has some value to pay, and the value is more stable, even though the price crash, and it won't crash too much. Like the stock market, it could like the stock, it could crash like more than 50%.
Yeah. Yeah.
So these are some pros and cons of investing in the real estate.
Yep. Just now we talk about the drops of how many percent and the increase of how many percent, and till now I realized that I used to think a drop of 10% can be covered by an increase of 10%. Yeah, but now it isn't, right?
If your portfolio lose 10%, you need 11% in order to get back the previous level. So you need to earn additional 1%.
Yep. Yeah. Also, I think nowadays we can invest just little money into the stock markets, and for this one, I think comparing stocks and the real estate, it is a pros here for stocks, because you don't need so much money to enter the market, is it?
If you have a significant amount, you also can investing in real estate. There's one kind of stock which is called the rate, the rate, IIT. The rate stock. So the company actually raise funds from investors and use that money to invest in the property, and then they rent out the property to other company. And but for this IIT, this rate company, for this kind of rate stock, and then they will only invest in the commercial property, and they couldn't buy the residential property and then rent out to individual. So for example, you have few type of rent. Let's say like the hospital, some company they raise funds from you, and then they buy the hospital, and then they rent out to the hospital. And because hospital is more stable, and hospital will rent in a longer period compared to other industry. For example, if you are a retailer, maybe you move your location every 3 to 5 years average. The hospital less likely will move their location 3 to 5 years. And also some is, for example, like the shopping center, for example, like the Valet, and also like the Sunway.
Mm.
Mm.
Yeah.
And also there are lots. Some other is office. Yeah.
How about schools? Are
It's
they?
also could be. Yeah.
Oh,
Mm. Yeah. So in Malaysia, there are also quite many rate. If if you go to the, yeah, because I'm not sure whether you have used one app which is called the KLSE Screener.
yeah.
This is
I. Uh.
this is the apps normally. It's a as the Malaysian investor will use if they invest in the the Malaysian stock market. Yeah,
Yeah.
and you can type REIT, you type REIT in the search, or maybe you can uh, you can you can go to any stock website, Malaysia stock website. Yeah, and then you type REIT, and then uh all the all the stock name we saw the we call the stock code, stock symbol,
Mm.
okay, behind the name, the code, the symbol behind have REIT. There's a rate. Yeah,
Mm.
there's a rate company. Mm.
Yeah. Yeah, I saw some of the. Yeah, many of it is hospital rate. Mm. Hospitality.
What?
Yeah. Because now I am. On the website. You said the KLSE screener.
Okay.
Yeah, and I typed the rate, the
Mm.
search, and then it comes out with some hospitality rate, and also we
Oh,
have uh,
actually there are a lot. Yeah,
yeah,
a lot.
healthcare.
And also one of this is a sun rate, is a Sunway.
Mm,
Mm.
yeah.
And also like the pavilions. I think if I'm not wrong, this is a mid valid one. So yeah, I couldn't remember. Mm.
Mm,
Yeah, and then if and then you can go to look at their, okay. Let's say I look the Sun rate, which is the Sunway one, and their dividend yield is 5%. Mm. Yeah. So theoretically, okay, but yeah, but if you saw the past, let's say the past 5 years,
mm,
the past 5 year stock price, yeah, it dropped a lot,
mm, yeah.
especially start from 2020. Mm. So you couldn't recover your loss from the dividend yield, from the
Mm,
dividend returns.
yeah.
Mm. Yeah, so it's around drop from 1.9 to 1.4. If I do a calculations, 1.9 minus 1.4, 0.5 divided by 1.9, and then your loss 26%. Wow, lost 26%. And then you
Mm,
can only get back the dividend yield, which is 5%. So if I net off, you still lost about 20 to 21%. Mm, yeah.
mm,
And at the same time, if you invest in SP 500 index,
yeah.
this is a different story. Yeah. This
Mm,
is this is this is and 20 plus percent uh rate of returns. Yeah. So one side is drop 20%, another side is increase 20%. So the gap is 40%.
yeah.
Mm, yeah. So mm, okay. If you let me choose, if I have if I have some money, will I choose to invest in real estate, or
Yeah.
will I choose to invest in stock market? I definitely will invest in stock market. Mm, yeah, and also if I don't want to if I don't want to pick a stock by myself, I will invest in the index, maybe using the dollar cost averaging. So for example, if you have 1 million, and then you can choose to borrow money from bank, and then you pay the mortgage.
Yeah.
You also can use a similar concept here. You calculate, let's say, if you are comparing what kind of property you want to buy. Let's say the property would, let's say 300K.
Yeah.
Okay. I need to go to one website, which is the home loan calculation Malaysia. Okay. www.calculator.com.my, which is one of the website we use quite often. Okay.
Yeah.
And if I use like 300K, and then let's say the loan period is also 35 years, and then the interest rate I put, let's say I just put 3.5%, and I click calculate. So monthly repayment, I need to pay 1,239.87.
Yeah.
Yeah, and I round the number is 1240. Okay, 1240. And then what I can do is I invest in stock market 1240 every month instead of buying house.
Yeah.
If I already own a house. So if you didn't own a house, maybe you have some consideration. If I can buy the house, so I can save the rental. If I can save the rental, and then I can use additional money to buy to buy the stock market. So if the premise is, if you already have a house, or maybe you don't need to worry about the accommodation problem. Or maybe you live in a room, or maybe you share the house, you share the room with your family member or your roommate, and then the rental cost is very, very little, maybe just few hundreds, maybe like 300 or 400. So it makes no sense for you to buy a house if you just consider from the investment perspective. And if this is the case, you can also like 1240 minus your rental cost. Let's say your rental cost is, let's say like 400. 1240 minus 400, X40. You use this X40 invest into stock market. And for me, I would rather do this. So because averagely and also in long term, stock market perform better than real estate market.
Yeah.
Okay, so do you have anything you want to add in? And if you need to make a decision, which one you will make?
For what situation
Let's say stock market versus real estate market.
and then how about the money I have?
Because just now what I told to you.
Given me 1 million.
Let's say, so maybe, or maybe because, okay, maybe not 1 million, maybe you, because now you live with your family, right? And then it seems like you don't have a plan to buy a house. And then if you want to do investments, and then now you have some money, let's say like, I don't know, maybe 50K or maybe 60K. So it's enough for the money enough for you to make the down payment when you want to buy a house. And then you also have stable income. And yeah, otherwise you couldn't buy a house because you can't pay the mortgage, you can't pay the installment. Okay, so it makes sense. And let's say you have like, maybe I put the amount, let's say 80K, and you are able to buy a house to make a down payment. But at this time, will you choose to buy a house, or will you choose to invest in stock market? Because you can put in your 80K, buy your initial positions, and then you you kind of like doing the dollar cost averaging,
Yeah.
like just like you pay your installment to the bank, and then do the dollar cost averaging into the stock market.
Yeah.
Yeah. So which one will you do?
In this case, I think I probably will choose stock market. Yeah, because for house yeah, because you have the commitment to pay the mortgage every month. And for stock markets, yeah, of course we have the plan to pay to do something like the dollar cost averaging, but it is not the commitment, right? It is not compulsory. You have to pay it. And so I think investing in stock maybe will make me will give me less burden instead of to carry a house mortgage.
So less risky, right?
Yeah.
Because you make yourself bankruptcy if you couldn't pay the money, or if you couldn't keep your dollar cost averaging at the level.
Yeah.
If you buy a house and if you couldn't pay your installments, and then after a few months the bank will ask you to sell the house, and then they'll they'll lay loan your house, and then you lose your house, and then you also lose your money.
Yeah.
And then you may in the blacklist. But for stock market, you don't need to suffer the risk, even though you lose everything. You want in the you wouldn't in the blacklist.
Yeah.
Yeah. So this is also a cons of the real estate.
Yeah. And then one thing I think we can mention out is for investing in real estate, it is important to choose the location, right? And then for those location which we think it will generate high returns, basically they are the price is already high. So if we say to enter the real estate market, it also requires us quite big amount of money.
Yeah, and my last question to you, response one of your point just now. This is, you say the real estate is scarce, is a scarce asset. Is that really a scarce asset? This is my question.
Yeah, I think there is also some it is scarce, but to what degree it is a question mark. For example, if we say the shops, and nowadays we see there are so many online stores.
And also Zoom replace office.
Yeah, so they may not require so many shops or maybe office. Yep, and then for house for house used for livings, also we can have something like apartment, right?
What?
Yeah, apartment. So they doesn't require so many
Yeah.
land.
Mm.
So and then add in one more factor is maybe the population in Malaysia is increasing, but maybe in a slower rate, and maybe in the future it is going down. So yeah, so this is also uh, the land, the house is still scarce, but to what degree it is a problem, it is
And
a question marks.
yeah, and maybe you missed one point here
Mm,
is even though the population increase, but it doesn't mean that there are more people afford to buy a house. And also that doesn't mean that there are more people who buy a house.
mm, yeah.
They can live in the same house, same room. Mm. It doesn't of course there is some relationship, there's some correlations,
Mm,
but uh it also has some other factor here. For example,
mm,
if the GDP, or I should say if the economics is in a recession, and then even though the population increase but they don't buy the house, mm, yeah,
yeah.
they may choose to rent, or maybe if they cannot rent, they will just stay with their family, they'll just stay with the friends, or maybe they can come out together and then like and like yeah, who want to share a room, mm, they can find someone who are willing to share a room
Mm,
online, from internet. Mm,
yeah.
yeah, so it doesn't mean that one room can only stay one people, one room can stay two people. And yeah, if the economics is in recessions, one room maybe can stay five people or six
Yeah,
people.
as much
Eh,
as possible.
yeah, if they want to cut the cost,
Yeah.
right? And also if there is no regulations, like Singapore restrict use only six people can live in one house.
Mm,
Yeah, Malaysia don't have these regulations.
mm,
So yeah, you can live maybe 10 persons, maybe 20 people
mm,
in a house. Yeah, right.
yeah.
So initially you have, let's say, like 4 or 5 people live in a house, and now you can have 20 people live in a house.
Mm, yeah.
So this is
Yeah.
how much? This is 5 times,
Yeah.
right? Yeah, 5 or
Yeah.
4 times. And then can your population increase 4 or 5 times? No, it's percentage. It's single digit percentage.
Mm, yeah.
So in my opinion, even though there is some relationship, but this is not the main reason. People choose to buy the house, or people choose to rent a house.
Mm,
As uh in my opinion, the economy would be the most
key
is
factors.
yeah, it's a key factor. It's the biggest factor here.
Mm, yeah.
Yeah, and two 2 weeks later, we have one video review on Monday, which is
Okay.
about uh it's also about the house. Yeah, it's also about the house. Yeah, and maybe at that time we can discuss whether the house really that scary as we imagine,
Oh,
and can some technology disrupt the whole industry, just like the car, like for example Tesla disrupt the whole industry,
mm,
and maybe some other companies, let's say Google,
yeah.
Apple, disrupt all the the a lot of industry like the Google disrupts the mass media, the TV, replace the TV,
Yeah.
and maybe the Apple replace yeah, a lot of things.
Amazon.
Yeah. And also, yeah, maybe Tesla could replace taxi industry in future. Not sure. And how about housing market? Can some companies, can some new companies replace the whole industry? We still have, so far we still haven't seen, but maybe in future they will have some this company. And on Monday review, on the next 2 Monday review, we may discuss this.
All right.
Okay. Anything you want to add in?
I think that's all for mine today.
Okay. So that's all for our today conversations. How do you feel? Did you enjoy the conversations? Please tell us what you think of our conversations. And we are not native speakers. If you found any vocabulary mistakes that we made, please also comment to let us know because we want to learn more and improve ourselves. Remember to like and subscribe to us. Thanks for watching. See you tomorrow.
See you tomorrow.